The Gaussian filter with standard deviation filtering is an indicator that works for orders, poles, higher than the usual 4 poles that were initially available in Euler's Gaussian filter formulas. Because of this, it is a generalized Gaussian filter that can calculate arbitrarily order, pole Gaussian filter, which makes it a unique indicator. To apply this indicator on the trading chart, search the keyword STD filtered N-pole Gaussian filter locks. Select the EP version by locks. The basic settings of this indicator are the period and the order. By default, the period is set to 25. The default order is set to 5 poles, which are 1 pole greater than the normal maximum of 4 poles. Traders can try poles of order 15 and above. For its implementation, the practical mathematical maximum is 15 poles, after which the precision of calculation is useless. The coefficients for levels above 15 poles are so high that the precision loss actually means very little. The purpose of the standard deviation filter is to filter out the noise, and by default, it will filter 1 standard deviation. Adjust this number and the filter selections, price, both, none, to reduce the signal noise. The Euler's Gaussian filter can be used for smoothing. It rejects high frequencies, fast movements, better than an EMA and has lower lag. This was published by John F. Ehlers in Rocket Science for Traders. Other functionalities included in this indicator setup are Lox's expanded source types, signals, alerts, and bar coloring. How does the STD filtered N-pole Gaussian filter Lox indicator work on the price chart? To apply this indicator to detect buy and sell setups in the market, the first step is to ensure we are in a trending uptrend or downtrend market. Don't use this indicator for trade anticipation in a choppy market. First, let me show you how to apply this indicator for the continuation of an uptrend. In an uptrend, patiently wait for the price to make a bearish pullback to the Gaussian filter line. Step 2. Watch out for a bullish rejection candlestick from the Gaussian filter line. Step 3. Buy the bullish rejection candlestick. As we can see, whenever the price hits the Gaussian filter line in an uptrend, it usually acts as dynamic support for the price. Step 4. Place your stop loss below the low of the bearish swing pullback to the Gaussian filter line. Step 5. Ride the trend up and close your trade whenever the price pulls back to the Gaussian filter line in the uptrend. Alternatively, swing traders can keep riding the trend by updating their trail stop to each successive bullish rejection up in the uptrend. To apply this indicator for the continuation of a downtrend, patiently wait for the price to make a bullish pullback to the Gaussian filter line. Step 2. Watch out for a bearish rejection candlestick from the Gaussian filter line. Step 3. Sell the bearish rejection candlestick. As we can see, whenever the price hits the Gaussian filter line in a downtrend, it usually acts as dynamic resistance for the price. Step 4. Place your stop loss above the high of the bullish swing pullback to the Gaussian filter line. Step 5. Ride the trend down and close your trade whenever the price pulls back to the Gaussian filter line in the downtrend. Alternatively, swing traders can keep riding the trend by updating their trail stop to each successive bearish rejection down in the downtrend. For the reversal of a bearish trend into an uptrend, Step 1. Patiently wait for the red bearish candlestick to close above the Gaussian filter line. Step 2. Watch out for the yellow triangle icon to pop up underneath the price. Step 3. Aggressive traders could buy the next closed green bullish candlestick. Alternatively, conservative traders could wait for the retest and rejection of bullish confirmation from the Gaussian filter line as new support for the price. For the reversal of a bullish trend into a downtrend, Step 1. patiently wait for the green bullish candlestick to close below the Gaussian filter line. Step 2. Watch out for the purple triangle icon to pop up above the price. Step 3. Aggressive traders could sell the next closed red bearish candlestick. Alternatively, conservative traders could wait for the retest and rejection of bearish confirmation from the Gaussian filter line as new resistance for the price.